let me introduce our two speakers today. So taking part today are two of Aveni colleagues. We have Joseph Twigg, the CEO, and we have Kent Mackenzie, who's Chief Commercial Officer here at Aveni. So with that, I'll hand over to Joseph to kick things off.
Thanks, Katie. Look, great to see so many people here. Thanks for giving up your lunch hour to be with us to discuss, I think, a really important topic. I'm really pleased to have Kent Aveni. He's quite new Chief Commercial Officer with us. Kent brings a plethora of experience across risk in financial services. Kent, maybe just a couple of minutes to introduce yourself, and then we'll get into it.
Yeah, of course. Thank you, Joseph, and delighted to be on this afternoon. So, as Joseph pointed out, I have recently joined Aveni. Hugely exciting time to be in the business and really excited about what's ahead. I spent, I guess, as I count back the last 15 or so years actually in big banks working across the lines of defense model. I've seen it ebb and flow over the years. I've seen risk management and the related operating model really change as new waves of disruptive technology have come online. So yeah, really excited to be now exploring that in the agentic age, and we'll share a few reflections and perspectives this afternoon. But back to you, Joseph.
Nice one, thanks, Kent. So, look, today's topic for me is super important. We are clearly in the midst of a fundamental technology shift as firms really wrestle with the impact of AI on their operating models. And I think this moment right now is a really fascinating juncture. The honeymoon period is over. It's been a good number of years, probably almost 3 years now, since ChatGPT burst onto the scene. Companies have invested millions. There was just an article in the FT, I think, today talking about the amount of money companies have piled into AI. And look, thoughtful experimentation no longer cuts it as an output and a return on investment. Exec teams are expecting to see meaningful ROI. And that's starting to build quite a lot of pressure for chief AI officers, CTOs to deliver. I think at the same time as that pressure is building over here, the introduction of agentic has really emerged as the primary focus for AI teams. And that's really causing a shift. So AI is transitioning from this relatively low risk co-pilot being wrapped around human activity, where the human retains responsibility for the oversight of the process and the output, to agentic, where effectively AI agents are increasingly taking responsibility for executing multiple steps of a process prior to any human intervention. So with varying degrees of autonomy. And this really shifts the risk exposure from this sort of localized human-based risk to this potentially a systemic risk. And we feel, based on all the conversations we have with our clients, prospects, and in the wider sort of industry, that this risk is not yet properly understood, and especially not understood in the context of how to adjust, amend, evolve the traditional sort of three lines of defense model. So this dynamic is really starting to get interesting. If you think about that for a second, you've got millions invested. 3 years on from ChatGPT, expectations really starting to build the pressure. Agentic being the focus, no one truly understanding the impact that agentic has on operational risk. This massive pressure to deliver, to drive value and release agents. It all feels like quite a risky moment in UK financial services. It also feels at the same time that this sort of central AI teams, agent building teams, risk teams are actually operating in slightly different lanes at very different paces. And I think the thing that, from what we're seeing, the thing that really seems to be shifting is a company's risk appetite. That's the primary impact at the moment of consumer agentic, in particular, both the company's risk appetite and the individual exposure of material risk takers and SMFs. Look, I don't normally present slides in the sessions, but before we get into it with Ken, I've got 2 or 3 slides to run through just to make sure that everyone's on the same page, and we've got the same understanding of what can be quite nuanced. This sort of calculation, I'm sure pretty much everyone on the call will be very familiar with. It's a basic operational risk calculation, impact versus likelihood, and your exposure period. The scenario I really want to work through is very popular at the moment in terms of consumer agentic. It's a financial guidance agent, and what can happen if that steps across that guidance advice boundary. So let's take a look at a scenario on the next slide. Here we go. So if we look at this, it's a very plausible scenario. So in this case, a customer has engaged the guidance agent, effectively saying, I've got 100 grand in my bank account, and I want to know what's better, a cash ISA or an investment ISA. And the agent's responded, given your goal of beating inflation, a stocks and shares ISA is likely to be more suitable. A balanced fund could be a good place to start. Seems pretty innocuous. Most people reading that would sort of ask what the problem is. The regulator might have a different view here. So, given the personalization, given suitability language, and given a specific course of action was proposed, it's the regulator may well interpret that that guidance is actually specific advice, and the agent thinks it's providing a helpful comparison, but that may have transitioned into an implicit recommendation. I think the big challenge here, given the amount of nuance you can introduce with language, is that you don't actually know what the likelihood of this materializing until something goes wrong and the regulator takes a look at it. So the likelihood largely is unknown in that risk calculation. If we go on to the next slide and take a little look at the impact and the difference between humans and agents, the interesting thing here in this example, humans are that the blast radius is limited to the diary, to the number of people they can speak to. So in this case, a financial advisor providing guidance can speak to 60 clients in a month. Those clients on average have 100 grand of investable assets, creating a total inherent exposure of 6 million. Feels about right. And in our experience, that that sort of 6 million could be exposed for anything up to a month until control processes have been executed. If we move on to the next slide and look at the same regulated activity being executed by an AI agent, this sort of localized blast radius is now one agent serving potentially millions of customers. In this case, we've taken the case of a large bank, 3 million mass affluent customers. We're saying that the agent over the course of a month has impacted just 10% of that customer base, and look at the difference in the exposure. 30 billion pounds inherent exposure impacting 300,000 clients. And if we go on to the final slide here, that translates to a 5,000-fold increase in the inherent risk. I think this case, especially from a large bank perspective, is very, very plausible. So the big question is, given this potential change in inherent risk, what do we do about it? What do companies do about it? What do boards do about it? What does it do to a board's risk appetite, to capital adequacy, to individual SMFs' willingness to own the risk? I think one thing is definitely for sure, and that is the traditional 3 lines of defense model, periodic control testing, that type of approach is no longer sufficient. So Kent, that's my preamble over. Let's get into this. So where do we want to start? What needs to happen to this 3 lines of defense model, this traditional model, to accommodate such a potentially huge increase in risk?
Yeah, thanks, Joseph. You've set the scene very well, and giving that one example in wealth is a bit of a shocker, and I guess when you think about it, that could read across to many different examples of how agentic processes are sort of proliferating the industry as a whole. Let me just call out a few things, and then I'll pause for breath. You touched on the three lines of defense model, and in my view, it remains the right organizing model across our enterprises, but it definitely needs to be redesigned for an environment that is now live, an environment that's always on and is agentic, enabled in many different cases. If you think about the model right now, the three lines of defense process right now actually assumes relatively stable processes. It assumes human-led execution and it assumes periodic testing. But what's clear, I think, through your example and what we've learned is that in the agentic environment, those assumptions completely break down. So we need to think quite carefully about how we redesign that model. Also, customer journeys now are no longer linear. They don't follow a standard process. They're shaped by many different things now, by agentic reasoning, by a variety of prompts, by how models are influencing or suggesting next action that ought to be taken. So the whole unit of risk really changes. It's not just about did a human follow the process. It becomes about a whole system of humans and agents and whether or not they're operating within appetite.
I
So
think that's a really really interesting point. So the um yeah, like the yeah, I'll let you carry on, Ken.
yeah, no worries, no worries. So I guess as I sort of draw my conclusion on the lines of defense model, we can't abandon it, but it needs to be retooled, and it needs to be retooled for speed, for scale, for levels of autonomy that don't necessarily sit with humans, and really importantly, for levels of evidence that are absolutely still required in the eyes of the regulator. Just because the agentic environment is affecting process and in some cases making decisions, it does not mean we cannot and should not evidence that to the regulator. So yeah, there's a couple of early thoughts on how that model will shift. I'll pause there, Joseph.
Yeah, I think for me it's the relationship between um autonomy and usefulness for agents. So, you can have a deterministic chatbot that can execute a customer journey. I think the objective here for consumer agentic is to increase autonomy, and there's a direct relationship between an agent's autonomy and its usefulness, being able to execute multiple processes for multiple customers. But there's also a very clear linear relationship between autonomy and risk. So as you increase the usefulness of an agent, you're increasing the blast radius and the potential impact of anything going wrong. And that relationship really needs thinking through in greater detail by central AI teams and risk teams.
Yeah, yeah. We do though. We have an opportunity here. We've got an opportunity really to think about creating, I know what we often refer to as a machine line of defense. So a control layer that is machine enabled, running and supporting the traditional three lines of defense model. And I guess what do I mean by that? In some cases, you may simply characterize that as machines watching machines, but whilst that is somewhat true, it's really nuanced. So I know we've talked about in our Risk 2030 paper this idea of the machine line of defense, the machine assessment that's doing deeper contextual assessment across these lines of defense, and actually a machine layer that is able to be continuous and to look across all activities. And I sort of think about that on three levels. So, can we use the advancement in agents to help do fast inline assessment at the first level? So looking at every agent-based interaction in real time and flagging for concerns or vulnerabilities. Can we then think about using more deeper contextual agents to consider how policy control frameworks and so on are highlighting a deeper assessment of agent-based interaction. So when we talk about the machine line of defense, what we don't necessarily mean is a fourth governance function. It's really about thinking, how can we use agents and agentic routines to support the lines of defense? But let me be clear before I pause for breath. It's not a replacement for accountability. It's really thinking about an infrastructure that allows accountability to operate at scale, and empowering the human to still, of course, make the important judgments.
Yeah, and again, for me, it just boils down to risk appetite again. So, if your individual exposure is 60 million pounds for an individual, for a human executing a process, your risk appetite may well allow for your control framework to be testing the output up to 3, 4 weeks after that exposure has been created, because that is your risk appetite. If that 60 million is 30 billion, surely you've got a very, very different appetite to realize that exposure in the market. So transitioning this post-event control framework where you're testing policies to something that's live and continuous to effectively manage that risk is how you're going to bring that this technology, that type of exposure within the risk appetite of the organization, and getting that alignment and being very, very clear and explicit on what your risk appetite is and how you're managing to remain within appetite is super, super important.
Yeah. Yeah, just one quick point to add on that. I mean, it does still sort of raise the question of policy and control frameworks. They cannot be static affairs. Policies and control frameworks need to be dynamic. They need to be refreshed to recognize the use of agentic process and agentic capability. And what I mean by that is clear guardrails, understanding model usage, understanding how prompts are being structured, understanding how orchestration works, weaving that into the next generation of risk appetite, risk policy, and then making those appetites and policies machine readable and codified to the extent that they can potentially be leveraged through the machine line of defense. So there are reverberations here. We're kind of dealing with. We've got to kind of adapt and tweak the three lines of defense to recognize the brave new agentic world. We've got to think about how can we use agentic process to create a machine line of defense, but at the same time, we've also got to think about how do we refresh and update policies, controls, appetite, and make them machine readable and deployable in real time. So it's a bit of a heady cocktail.
And it feels to me like what you're talking about here is a multifunction business transformation. Like that all has to work in sort of lockstep together. So you're reworking your risk framework at the same time as you're trying to release agents, and you're balancing the risk in your agents with how you've adapted the framework to measure that risk. And that's one thing that we're not seeing much of at the moment, this sort of true lockstep between these central AI teams, agent building teams, and risk teams. So with all this stuff, Ken, with all of these things to consider, put yourself into the mind of a CRO. Like, where do you start? What do you do first?
Yeah, it's a really, really great question, and I'm kind of reeling a little bit on all the things you've talked about, but let me just try and structure those into the mind's eye of a CRO. Um, I guess to be clear, and I'll make a bold statement and then kind of double click on it a little bit. The CRO, she or he, needs to really have and understand one enterprise-wide model that's in place to approve agentic use cases before they even come into production. So I'll kind of start at the pre-production, and then I'll maybe go a little bit further down the life cycle. So I guess being very clear in what does an approval model look like for supporting and approving agentic use cases. And this is about making sure that local innovation doesn't necessarily mean local controls, that there's a set of controls and policies that sit across the business, checkpoints and processes to approve agents before they come to life. And that model and I guess approval record needs to be very clear about the autonomy that exists in the first line and across business unit agentic deployment. It needs to be clear about permissions, boundaries, human approval points, kill switch controls, and I guess a clear line of sight into the real-time monitoring that ought to take place going forward. So I kind of, as a CRO, I think about how do I get myself comfortable before I allow any agents actually to kind of make it into the production environment. CRO
Just
needs to know that.
unpacking. Oh, sorry, Ken.
No, 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 it's okay. I was
Just
just, yeah, go ahead, Joseph.
yeah, just gonna say on that, like unpacking that, like the being able to assess the risk that a particular agent, a particular use case introduces will largely dictate the policy around that approval process, right? I mean, if it's consumer agentic and it's financial advice, you know, the burden of proof is going to be incredibly high. The number of simulated interactions to test that agent on, incredibly high. The pace of rollout, incredibly slow. Like, you know, we've got to codify all of that into a scalable, repeatable policy that can be operated across multiple business functions at the same time. And
Yeah.
yeah, you know, it's essential, I think, to get these at least initial versions of these policies out there in the wild, being tested
Yeah.
very early on, because what's in the policy will effectively be your approach of assessing that agent on a live basis.
Yeah.
So getting that right is very important.
Yeah, you're right. There's sort of two sides to this. One is having that policy clear and understood and sort of proliferated across the first line. So that's kind of one bit. Get that absolutely right and make sure it's dynamic and it refreshes in line with how the business are developing. And then the other piece I would suggest is then allowing the first line, the business unit builders, to almost stratify their agents from the relatively straightforward to the mind-numbingly complicated, and have that policy align with I suppose the relative severity, if you like, for want of a better phrase, of the agents that are coming through. That's how you bring this life. Now, just to be clear, whilst I haven't been right across the industry, I'm not sure anybody is really doing this right now. There feels like a kind of bit of a pent-up desire to get some wonderful agentic routines into production, but the stumbling block becomes that ability to test that they will behave themselves when they come into production. So, whilst we talk about the principles here, I'm not sure anybody has quite landed it yet. But yeah, in my opinion, that's what needs to be true for us to really realize the opportunity of scale here.
And I think that's emerging as a broadly held consensus. You know, the technology here now is no longer the thing holding back those production use cases. It is the governance.
Yeah.
It's the, you know, if I can deliver great financial advice, financial guidance 99% of the time, brilliant. But there's that 1%, and that 1%, you know, is really in the sort of nuance of regulatory language, and it's incredibly difficult to control. It's very hard.
I mean, this principle of unified assurance, and I think we've talked about this in various papers and thought pieces that we've put out, is kind of is sort of the holy grail for where we want to get to. And what do I mean by unified assurance? So I'm talking here about sort of a central model that is very, very clear on a single taxonomy that's used to monitor and approve agents, and then to provide real-time assurance when they come to life. I'm talking about a unified process that sign-offs and evidence flows through, a unified understanding of appetite and policy. It's really combining all of these things and using that to empower this machine-assisted line of defense that I think will win the day here. And quite frankly, this genie is out of the bottle. So we do need to, I think, as an industry, move our thinking quite quickly towards this sense of how do we unify assurance across human and AI-led assurance activities.
Yeah, I think that's it's going to be the next battleground, isn't it? I think, you know, the regulator stance today. It'll be interesting to see what comes out of the Mills report, but the stance today basically is, you know, the outcomes for the customers are good, the method of delivery, whether it's a human agent or an AI agent, is less important, as long as you can demonstrate good, fair, consistent customer outcomes.
Yeah.
As we move into this complex world of digital and human workers in a network, where providing true traceability and evidence may become quite difficult. Having an approach to line up agent conduct with human conduct in a unified manner, I think is going to be, again, actually it will emerge as a standard and a prerequisite
Yeah.
for the industry.
Yeah, and let's be clear about this. And it's also not complicated, right? The regulator expects the same outcome whether they're served by an agentic digital capability or by a human. And if we put ourselves in the shoes of the customer and therefore what the regulator will expect, the customer doesn't want to experience the bank's operating model. They want to experience the outcome. So it's really important as we think about this unified assurance machine line of defense that it's invisible to the customer. But the focus remains on the outcome. The regulator, the Mills review will be fascinating, but it will not change certain things. The regulator will not accept a lower standard just because the decision was made by a machine. All the same standards apply: fair treatment, suitable outcomes, appropriate disclosure, vulnerability handling, good escalation, accountability. All these things still exist. And again, without sort of going back to the over rotating on the point you made at the start, but if an agent gives poor guidance at scale, that becomes a systemic control failure, and it's one we really need to guard against and think carefully about how we control against that.
Yeah. And just to reflect on one of the questions that have been asked. Organizations can rework risk frameworks, but do you think the FCA is thinking enough about agents and the guidance around them, and how will Mills focus on this? I think for me, it's difficult. I mean, the regulators in a very, very difficult position, right? They are sat in between a government looking for growth and either deregulation, re-regulation, whichever way you want to look at it, and the introduction of the riskiest technology, to the industry ever. And finding that balance and operating at speed to manage the risk for the industry, I think is going to be an incredibly big challenge for them. So, we'll keenly await Mills' report in a week or two's time to see where their focus area is.
I think undoubtedly it will be part of that discussion. It has to be. We are rapidly moving towards autonomous, partially, in some cases, fully. It'll soon tip the balance into more fully. So I would be very surprised if the review does not look at frameworks themselves. But I guess I've spent a lot of time in and around risk frameworks, and they can be quite cumbersome and non-dynamic. So there needs to be something about how do we tune them, codify them, and allow them to be dynamic to I guess adapt with a world to a world that's really changing pretty quickly.
Yeah, and there's another question here on is this the moment for the second line going from sort of reviewer to growth enabler? I think that the short answer to that is probably yes. You know, to the point there, you fast forward 3, 5 years and look at second line. First, like, look at the three lines of defense. Look at the type of skills that risk professionals have in that future model. Look at what they do on a daily basis. Monitoring the machine line of defense, which is assessing every interaction. It's triaging the high risk output from that risk framework for deeper, more context aware human assessment. It's monitoring these things live at scale across millions of interactions. You know, getting the second line risk function right in for this world is going to be very, very hard. And it's going to cause a true transformation of that world, I think.
It's do you know what though? It's really quite exciting, and I've got a couple of examples where it is working, and it is really becoming a growth enabler. And you know, as I say, as I kind of think back through many years of sitting through risk committees and innovation committees, and the two things sort of coming together. Historically, when those two things have come together, sometimes there's been a little kind of, oh, right, we're going to slow down because second line of defense are here and they're going to tell us about all the things that we can't do and ought to be careful with. Now, when these two committees together in a kind of, you know, a kind of high functioning relationship, when they come together, innovation and agentic committees say, thank God you're here because we know we need to be doing this responsibly. And we know that you have perspectives and views on policies and appetites and frameworks that need to be in place. And we know that you've designed them in a way that that we can adopt in the work that we're doing. That's what kind of good looks like in a sort of high functioning second line meets agentic innovation world. And in that example, Joseph, they truly are growth enablers. So, you know, for me, this is really the time to shine for second line. That's not too many rhyming couplets in one go. It really is the time to show up and think about this, and you know, think about how we sort of breathe life into that line of defense model.
But we are not there yet. I mean, you know, the lived examples that we have just through our engagements across the industry. You know, the currently the you know risk functions are out of step with the agent building teams, right? And you know, there's no better example of that of the multiple occasions that we've seen when an agent building team has effectively been off over here and they've built an agent and they think that agent performs particularly well. They're very excited and they want to go through a controlled release in the wild. And then at that point, they take it to the second line risk function, and they basically go, "We've built this agent. It does X, Y, Z. Fantastic. Let's get this released." And the second line risk function effectively lobotomize the agent to manage the risk. So, you know, that is, and the agent becomes useless. So these teams have to work together at the outset. And that's what we need to see much more of. And the way to do that is through these initial policies and frameworks around assessing agent risk and really understanding the impact that each use case has on your risk appetite at scale.
Yeah. So maybe I share just a few thoughts on, well, what does good look like if we get this right and we sort of pull the threads on what we've talked about. And I listen, I appreciate it's really not straightforward, but let me maybe paint a little bit of a positive picture on what good looks like. I mean, first thing to say is there's a lot of stats that go out there on how many agents have we released, how many agents are we deploying. That's all fair and good, but I think the banks and industry will not be defined by that metric. It will be defined by those that can prove that those agents are under control and there's the right mechanism in place, there's the right tiering structure, there's the right risk appetite model in place to do so safely. And I think that the winners here will be the ones that can credibly and clearly explain that to their board, to their customer base, and to the regulator. If I kind of double click on that, well, what does that mean on the ground and in these businesses? It means there's one enterprise model for agent approval. There's one enterprise model that has common standards, a common risk taxonomy, a set of common sort of tiering structures and approval requirements for operating agents in live. But good to me looks like policy really embedded into control as well. So having a dynamic and I talked about before, a codified way of taking those rules, thresholds, guardrails, and building them into what I referred to earlier as a machine line of defense that's operating continuously, not periodically, not on a monthly basis. Yeah, it's happening in live. And then final point, really good to me looks like evidence available by somewhat by design. So being able to provide traceability, lineage, replay, clear view of intervention records where human judgment has been applied across some of the complicated cases. I mean, the ultimate test here, Joseph, is simple. It's can institutions show at any moment that they're still in control? So yeah, there's a few thoughts around what getting it right looks like from me.
Yeah, and that's I mean it's going to be a lot of effort and a number of years before you get into this sort of agentic operating model with a fully functioning risk framework, and it's just that juggling and balance in the journey to get there. I mean, someone's asked a question here on how realistic it is to get the risk teams embedded in these sort of agent building teams. And I don't think you need them to be embedded in the agent building teams. You still need that degree of independence. Um, but the risk teams have to be able to understand the agentic level risks. They have to understand the risk profile. They have to understand what's being built, what the blast radius is, how what the potential conduct issues are, like who runs agent conduct. So I don't think they have to be embedded in the teams, but they have to be really, really close, and they have to have a skill set and a knowledge base on par with the teams that are building the agents, so they can effectively check, challenge, and understand exactly what's being built.
Yeah, I guess just a point on. So I'd agree with all of that, and actually, I am seeing some really good and positive and constructive examples of where agent builders and risk teams are coming together in these sort of innovation meets risk committee type examples, and it's really interesting to observe that and listen. Sometimes people show up with a degree of anxiety that they don't know enough about the finer points of AI engineering and prompt management and this, that, and the other. So there's a bit of anxiety sometimes there, building the knowledge base to be able to have a really credible conversation with agent builders. There's a bit of sometimes anxiety because behind the scenes, risk possibly know that their enterprise-wide risk management framework is pretty non-dynamic and static. So, there's a few barriers to break down. I think building knowledge is a really interesting one. And I'm stating the obvious here, but I would absolutely suggest that everybody reads and becomes inquisitive and sits next to their favorite AI friend here because there's a huge amount of knowledge to absorb that I think once that knowledge base is built up, it doesn't take long to then switch on the risk lens and apply that knowledge into risk policies and controls. So it is happening, and I think it is realistic. I think it's just making sure and recognizing we come from slightly different places, and we probably need to spend quite a lot of time together. But I'm optimistic that it does happen and will continue happening.
And I think the really important point here, and something that we've sort of witnessed as well, is this works both ways, right? You've got agent building teams, central AI teams that really need to understand how risk is managed across the organization, understand business level processes, customer journeys across the organization, and really um, uh, uh, build out their understanding of business level process and control frameworks in order to create the ingredients to build well controlled, safe AI. So that definitely works both ways. It's a real education from both sides there, I think.
Yeah.
Excellent.
Fantastic. Yeah. Was there anything else, Joseph, you wanted to sort of pick my brain on or me to reflect on? I've not kept track of all of the questions. So I'm not sure if there's any other questions or if there's anything you want me to double click on.
Look, I think we've covered most of the questions. We've got one more coming in here for industry level, right? So how realistic is it to think about a shared framework for industry adopted by multiple financial services institutions? And look, I think this is an absolutely great question. And I've got a feeling I know your answer, Ken, I know my answer, which is absolutely like 100%. I think it has to be industry wide. Frameworks, standards, methods of safe AI adoption should be shared and should be common and consistent. But these things take time. It's going to be a number of years of trial and error of different frameworks emerging before one dominant framework emerges and is widely implemented across the industry. But that I think it's super important from a consistency perspective.
Yeah, I'd agree. I'd agree. I mean, there's some absolute red lines and boundaries that, whether it's in banking or any other industry, we must uphold in responsible deployment of AI and agentic routines. And I kind of sort of stare wistfully into the middle distance, and I see some kind of framework that encapsulates those guardrails and some just some absolute bare minimums that we ought to adopt at the industry level. Wouldn't that be great? And possibly we will get there. I'm not going to necessarily hold my breath, but I would like to think we can get there. And then, of course, there's a level of bespoke to that when you take it into the organization itself. It's clearly going to be driven by the risk appetite of the business and the expectation and the culture and the customer profile and so on of the business. But yeah, I think we possibly could get there at some point, but we're still in that kind of, I think, collectively in that world of building knowledge rapidly to be very clear on where those guardrails should sit.
Yeah.
Did you have a chance to read the last question, Joseph? If you
I've
did,
just been reading that. I'm not sure it's a question, more of a statement, but I think the general sentiment there is from a risk and regulator perspective, there is a long illustrious track record of being behind the curve, and I think we have to accept and own that as a fact, right? That is the case. And when you superimpose that on the pace of change, and I think you know that could be seen as very much a difference between cloud, data, digital, the internet itself. The pace is very different here. Yes, there might be similarities in terms of the transition from localized to systemic or global risk patterns, but the pace that these things are being introduced is very different. Um, and we have to accept and own that, and be really open-eyed when it comes to the fact that the thing that is shifting when agent builders um basically are looking at risk, going, well, you're way behind, regulator, you're way behind. I'm just going to go off of here and I'm going to build my agent. The thing that's changing is the risk appetite of the individual and the risk appetite of the organization. And really understanding that point is very important.
yeah. I'm somewhat sympathetic. I am sympathetic to the regulator here because as the participant points out, there have been waves of evolution and so on here. But yeah, you're right, Joseph. The pace that we're dealing with here, I think, is the game changer. So I am sympathetic for the regulator. They've got to think about the entire industry. We think about case to case and how one needs to adapt, and that's complicated enough. The industry needs to think about an entire industry, and not least, we haven't even mentioned the word sovereignty yet, but there's a whole sovereignty element to that as well. So I'm somewhat sympathetic. Yeah, I think we kind of have a bit of a responsibility as an industry as well to work really closely with the regulator and not wait and engage in some of the great stuff that gets done. The sandbox, the various calls that the regulator does the roundtables. They're very well informed, and they're very progressive in how they're building their knowledge quickly to help us in this space.
Yeah, brilliant. Well, look, I think that's pretty much time. There's one more question on the cost of AI. And will agents not just accelerate this? I think, I mentioned this at the outset. It's in the news again today. Um, you know, like the adoption costs are astronomical. And they're astronomical because the expectation of evolving the scalability of your operating model and the cost base over time are so significant as well. And while the promise of that is there, the cost is going to get signed off. But at some point, these things bump up against each other, where the delivery of value is too slow for the investment that's going into it. So I don't think we're a million miles away from that right now. And yeah, it's something to keep our eye on.
Yeah, just one final point on that, because this is going to become actually the topic of debate, I think, in the next few months. What am I staring down the barrel of here? Am I staring down the barrel of being, I guess, hooked on large language models that are underpinning everything that I do, such that when the cost spikes, the dependency remains and my cost base goes through the roof. So that will become the debate in my head that rages through business cases over the next few months. A couple of really simple things, or I say simple, a couple of ways to think about this. So use of local small language models to do fast, analysis that can then inform where you might want to do more contextual based analysis through larger language models is a lever that can be pulled to balance that cost equation. Understanding where human in the loop exists is another lever. Building yourself. Granted, there might be a capex, but you certainly solve some of the sovereignty concerns and possibly the opex of costs going forward. So yeah, maybe in another webinar we can double click on the cost component, but there's just a couple of thoughts around the debate, Joseph, to close on.
Brilliant. Well, look, let's call it there. I think we're at time. Ken, really appreciate your contribution, and thanks again for everyone giving up their lunch times to come and attend this webinar. We've got a series of webinars coming up. I think this topic is one to watch, right? It's going to evolve pretty quickly as the Mills review comes out in a couple of weeks' time. And yeah, we'll look forward to seeing you next time. Thank you.
Thank you, everyone. Thanks, Joseph.
Cheers.